a look at that.
Okay. What pair do you use it for? Forex pairs or doesn't matter?
Primarily for the Asian session, Aussie yen, GBP yen, NZD yen. Primarily, I trade the GJ. I
Okay.
prefer the GJ.
All right, let me grab GJ right here. Bam. Forex.com feed. Okay, all right. So let's talk about what it is that you're looking for.
Well, first of all, I was wondering why. How can we trade in between ranges? Okay.
Okay.
So, my biggest concern was how or which range should I pick? Selecting time and price.
Okay.
So I started studying how to trade on the Asian session, and I came to a conclusion why the range from 12 noon to 8 p.m. 12 noon, it's the end of London close, right?
Right.
And 8 p.m., it's the Asian Open, so to speak, based on the ICT Asian kill zones.
Right.
So I chose that range to trade the Asian session. Okay,
Okay.
the highest price and the lowest price between it. So when either of any of those prices is liquidated, I'm looking for a breaking market structure, a sign of a reversal, so
Okay.
that I can trade the reversal.
All right. Awesome. What time frame do you use when you're looking at this?
Um, I like the 15-minute time frame, and I look for targets as well on the 15-minute time frame or the 5-minute time frame.
Okay. Let's grab. So that's 8 p.m. and then 12 noon. Somewhere about here.
Yeah.
Okay. All right. So let's see what this setup has and what we could have done.
Okay.
Do you use the bodies or the wicks?
The entire range, wick to wick.
Okay. So I'm seeing that right there as the entire range. Incorporating the wicks.
Mm-hmm.
Okay, so at this time you're looking for price to, well, not really looking for, but you want to see trade above one of these. So here we have price trading above this. Would you be thinking
Yeah.
of going short when price breaks this low, or are you more interested in going long here?
I'm interested in going short.
Okay. All right. So what are you looking for in here to give you a short bias?
Okay. I well, the question that I ask myself is how can I determine, for example, a session bias?
Mhm.
So, like for example, if the Asian session is going to be bearish or bullish. So ICT says that when liquidity has been taken,
Mhm.
uh, generally speaking, there's going to be a retracement, right?
Right.
After liquidity has been taken. So the framework in here is that after the high is taken, a retracement must happen, or you anticipate a retracement.
Right.
So that's where I look for my entry. Um, that's the main framework.
Okay.
I don't know if that have you ever thought about that, or I don't know. It was just an idea that came up to me.
So in my studies, I've found that there's more consistency in understanding that price is fractal, finding a fractal, find what makes the fractal work, what
Mm-hmm.
context the fractal works in, and then just manage the risk around that fractal. You don't need to learn a million things. You don't need to be in the market every minute. You just need to focus on specific prices in that fractal, and you'll be fine.
Yeah.
So one fractal that I have talked about in my channel before is one that we know called the GJ model, simply because the first time we talked about it, it was illustrated using GJ. Okay.
Yeah.
So essentially the fractal is like this. Want to see an order block get created like this here, right? Then you want to see this become a valid order block. Now, for valid order blocks, they must create a swing that break market structure. That's how I look at them. If I see an order block and it makes a push and the push didn't take a high or a low, then I'm really not interested in trading at that order block, right?
Okay.
So let's look at what we have here. We have a low right here. Then we have this order block here breaking below that low, meaning it's creating a swing that starts at this swing high and it runs to break this low. So this impulse breaks market structure for me. So this becomes a valid order block.
Sure.
All right, cool. Now, price trades all the way down here, does all manner of stuff that I don't really care about. I don't care about anything price is doing here unless it comes back to my order block. So the only thing I'm going to be doing different is once that order block is formed and price makes a low, I'm keeping note of every time a low is formed. So if I switch the colors a bit, when that low is formed right there, I'm making note of it. And the reason I'm making note of it is I want to see if price is going to stay in a range from this swing high up here to that low that was just formed. And that's going to be my area of opportunity. Okay?
Okay.
All right. Price didn't stay in there. There was a small retracement and then we ran through the low right here. So we have a new low being formed. So now my focus is from this high to this low as my trading range.
Okay.
Now this gives me a whole lot of context because now, where's that ruler thing? I now have a range that's potentially, wait, let me clear up all of this. I have a range now that looks like it's way more than 10 pips. And that's something I like. So the range, let's use wick to wick because that's what you're using. Wick to wick, this is a 55 pip range. So now, my main focus is I don't want any trades, or I'm not going to trade until price comes back to this order block, right? That's my first rule. I don't want anything in here. Anything in here is gonna happen without me. This is now my range. That high to that low. If you trade ICT, and you can blend some other things to the trade, and that gives you this level here as your equilibrium. So what you can do now is you've now framed the range that you plan to trade, and you know of an idea of where ideal or A+ setups and normal setups can form. So for absolute best setups, I needed to come back to my order block. Anything above this blue line is something I'd consider for a quick scalp, and then that's it.
Okay.
Naturally factor in time of day and all that good stuff. Now, if this becomes my trading range, there's two things I'm focused on in terms of an expansion outside of this range. If we close above this high, price is bullish. So now I start looking for bullish order blocks and I wait for a retracement. If we close below this low, price is bearish, and I'm now looking for price to trade back to a bearish order block to get an entry. Okay?
Okay.
So now, with this original range, when all of this price action is being formed here, I'm just seeing this as liquidity being created inside of the range. We have liquidity resting right below the area that I'm planning to enter. So anybody who enters in here and they put their stops anywhere inside here above these highs, I want to see those stops get taken so I can enter.
Okay.
So when price is trading above these highs in here, I like that because not only is it running out these stops, it's also trading back inside this order block. So I have a lot of confluence. We're above the 50% of the range. We're inside the order block. We're taking liquidity. If this is the range and we're taking buy side liquidity and the market is bearish, then the only other areas for price to trade to would be sell side liquidity, which will be down here.
Yeah.
So now there's two ways to enter now. You can either trade very aggressively or you could be more conservative with your entries. The aggressive entry, take the fib off, would be waiting for price to trade back inside this order block and then you start selling in here.
Yeah.
Okay. It's aggressive because on a pair like GJ, it might not necessarily close above this order block, but it can wick and then come back.
Yeah.
GJ spreads are nasty.
It happens.
Right? So while with a pair like odd USD or EU or GU, I'll trade this aggressively. But with GJ, a pair that moves very fast, or gold, I'm not trading this aggressively. So now I start shifting my focus to trading order blocks that are formed inside this area. I'm going to take this box away for a second. And let's call this order block range my POI.
Okay.
Let's pull it all the way across. So I don't want any trades unless I get an entry pattern inside my POI. And I trade order blocks. So price trades up like this, creates an up candle, and a swing high. Then we break below it like this right there. At that point in time, this is a 50-minute time frame. I'll go to a lower time frame. And let me tell you exactly what I'm going to be looking for. I'm going to be looking for, does this push close below a down candle on a lower time frame? That's very, very specific. Okay. This push, when it goes below the order block here, I'm looking to see if we close below any down candles inside here, and that sets up an entry pattern that I like to use. So now I'll go to a 5-minute chart. Let's pull this up. So now these two candles become my order block on a 5-minute chart. Once we close below them here, I'm looking for down candles in here that price close below. Once that happens, I look at that as a breaker structure. So now let me take off this and take this line off too. Now I'm gonna move this line to that down candle low right there. Price must close below that down candle low before I get interested. This is not very convincing. So I'm not going to be looking for any kind of shorts in here. Instead, I'm looking at this leg down here that created that break, and I want the order block at this high. So it becomes a fractal idea. Here's my order block. At this point here, once we close below this low, my bias is bearish, but my entry pattern says that I need to get an entry at the order block up here. So when price comes back here, this is something I'd probably take to my stop above and then just let it go. Or that's the entry. Okay?
Okay.
Now when this happens, you use RR and all that good stuff. Let's say that this right here becomes my stop loss. Let's pull down entry to right at the order block right there. and I'm aiming for a minimum 3 to 1. Now, this is not, I don't use RR tool, and I don't aim for 3 to 1 or anything like that. Just giving an idea here. So a 3 to 1 trade would take me right there. Now, what validates me taking an entry here would be if this level lines up with an area of liquidity from over here as well. So just looking at this level, that's not very convincing. This is the obvious liquidity pool that the market could take.
Yeah.
Right? So now instead of a 3 to 1, this trade becomes a 5 to 1 trade. So we enter here, that's your stop. Naturally, you manage the position, so you're taking partials and all that good stuff until you get down here. Now remember that this blue line is the midpoint of the range. Okay, so once we close below the midpoint of the range, price is now in discount. If it's bearish and in discount, I have to see them closing below lows. Not wicking below them, but bodies closing below them. And that's when I get comfortable. Whenever I see a new low get broken, I look for the order block that started that push and I wait. This push right here. Take off some of these lines. Right there. Once price closes below here, I'm looking back before this point for the order blocks that started the push. Right there.
Right there.
Then it becomes the same thing again. I'll add another entry here. That's the order block. And now my first scalp target becomes here. If we can get below this, then I'm comfortable. I partials, I break even, and then these can run for all I care. Comes back and stop me out, doesn't matter. But as soon as we expand below here, I'm moving this stop all the way down to this order block high as well. So what I make from here and what I might get stopped out from here will cover all that, and then that's the end of it. You can leave it to run for a higher time frame target by simply zooming out to a 15-minute chart and then let your partials run to a 15-minute target. I don't see any right here. I haven't traded GJ in a minute. But if we go over here, this is an obvious low. We're already below that. This is now the 15-minute target. So if I'm going to hold partials to run, this is the target.
Okay.
So there it is. We'd hold this for here. Now, if you're watching this live with no take profit, when this happens and it wicks below and comes back, I'm no longer interested in this trade. Because for continuation, I need to see a close below. No close, I lose interest. Just like that. Okay. So essentially, what I've just shown you is this pattern. An order block is formed, price moves down, does whatever it wants to do in here. Doesn't matter to me. Eventually it trades back to the order block, which is right here. Once that happens, these lows become my target. And that's my trade plan. If we close below here, then I'm zooming out and I'm looking at a higher time frame for a higher time frame draw. I leave partials to run for those. This fractal forms everywhere.
Yeah, every single day.
It's right here. Same idea. I think this was one that we're looking at. Yeah. So with this, with your model now, you're focused on, let's take off all of this. This range inside here. So if that's the case, then the low of the range is right there. And the high of the range is pretty much right there. So my question is, where do you get interested in going short? Because in this art, is this a no trade day?
Well, in that case, I believe I sent some pictures about that. On the 1 minute time frame, I saw like a little fractal. You can go to the 1 minute time frame if you wish.
Sure.
On that same area. Right there. Can you zoom out a little bit more? Yeah, right there. No, let me see if I can. In this area, I saw something that you spoke about. The break of a low, an intermediate low, and after that a return to an order block right here. If you like, can you zoom out a little bit more of that area?
Yeah, just saw that.
So I like those type of entries on the 1 minute time frame. You break a little intermediate low, you have an order block right there. Boom. After that, you break exactly another low, and perhaps another entry if you wish at the very high or previous to that. Perhaps in here, all this range, you have another entry right there. Obviously, this is a very good day. Not exactly every day like this. Perhaps it's only one of this, but I'm happy with only one. So, and here's another entry. So you got 3 entries in this little retracement, which were the entries that I sent yesterday. I did not consider the one that you were studying, which is far better.
So it's not better or worse as it relates to a particular pattern. It's how often do you see it form. So for me, that entire pattern is an understanding. The understanding is a range is created. Let's create an hypothetical range. Let's say this is a range.
Okay.
Right? Inside this range, we have an order block here at the high. Okay. Price trades low, creates a low, retraces off the low, then there's a stop hunt. Small breaking market structure, RTO, run back to this order block here. That's your trigger to enter. If you're hearing some nursery rhymes, it's probably my daughter.
Yeah.
Oh, okay.
Yeah.
All right.
All right. So when this happens, this is the ideal setup to form, because when this forms, you can see that there's this low, just asking to get taken.
Yeah.
Right. So then your entry is there, and then you're looking for price to break outside of this range. This entire fractal can look like, let's use a nice color like this. This can be a candle that looks like this. This is one candle. Maybe the candle gaps up a little bit on a lower time frame. This is another candle.
Okay.
That's that candle here. The next candle, let's say the next candle opens here and expands low.
With the wick.
This wick is what goes back to here.
Yeah.
And then maybe, just maybe, you might have wicks here that forms a nice liquidity pool of lows right there.
Okay.
All right, and then you enter there, and then that's it. So now, seeing this on one time frame, what I usually do is I study the fractal across multiple time frames. So that helps me to see different fractals. So in some cases, this is where it might get a little bit hard to see. In some cases, it might look like this. That's one candle, and that's the wick. Between the opening and the close of this candle might have a gap.
Wick.
Up, then it wicks it. Then it wicks down like this. Then the next candle comes back up. So there is no fair value gap, or in some cases, you might see this happen. But then this is something else. This is the low right here that forms a possible fair value gap. So this drop lines up with this low, and this closes the fair value gap that was formed right here. Then price drives lower. So the candle patterns are just forming around this narrative. That's what I want to show you. So it doesn't matter what range you're looking at, it's what's inside the range.
Yeah.
What's the range made up of?
Okay.
So the range that you're looking at, the 12 to, or the noon to 8, it's a pretty wide range, and I can see that there are times when this is going to work.
Yeah. In fact, I mean, at least in a week, you can see this type of setup like twice a week. It's not that very often. Sometimes you see that literally price just goes boom, or literally just touches the very high and bam, dies, and little you can't do anything.
True. So in order to make this more effective, like a trade plan, you're gonna need rules that don't change. For instance, journal how many times you win this trade and how many times you lose. When you win, what time do you get the best entry? What was the pip count of the range when you win? What was the pip count when you lose? Journal all these things, and then you compare the data. So you might see, for instance, that whenever you win, the range is 15 pips, 30 pips, 20 pips, whatever. And then price retraces at midnight or in London or something.
Okay.
Whatever it is, you don't care. You just want to journal it. So you have a decent amount, maybe like 3 weeks of data that you can compare.
Okay.
The pattern forms on this day of the week. The range was this amount of pips. I got my entry at this time of the day. If there was a stop on, what time did it form? When you have all that data, it removes this feeling that everyone wants. Everyone wants to take up your phone and just see a setup, trade it, high precision, and then it's over. You go back to bed. In order to get there, your trading has to be, it has to become like an instinct. So you look at a chart and you say, all right, am I going to trade today? What am I looking for? You need a checklist. If this was my plan, what day of the week is it? What's the pip count in the range? Was there a stop on? Did we break structure? What time should I get my entry? And let's say I should get my entry at New York opening, and it's now London, and I look at this. If there's nothing, then I'm just gonna go back to bed.
Yeah, right now my personal model is somehow the same idea as this one. I only trade the New York session with either USD CAD or the Euro, and I look for exactly the same things. If you take down a high or a low, and then looking for a reason to end. Sometimes I take a look at the dollar index as well to like have another like confluence if price is going to go higher or lower. As well, this repeats like 3 maximum 3-4 times a week, and perhaps I can get those trades.
Okay, understand.
Yeah.
So if this was my model and I was starting out brand new, that's the kind of data that I would want.
Okay. Okay.
The timing aspect is the most important. What time do you get the stop hunt? What time do you get your entry? How many pips does it offer after entry? Does it retrace? Where does it retrace to? If it retraces to an order block and then gives you a big reaction, what time was that order block formed that gave me that reaction? These are the little details that make a whole lot of persons fail and a whole lot of other persons win. Order blocks formed in London tend to be very high probability. But most persons will know this and they'll see, I need a bad example. Let me go grab a pair that probably has a bad example. All right, let me keep this one. I think we're almost out of time.
Okay.
Let's use Euro USD, everybody's favorite pair. Euro USD. Let's clean up all of this mess. Now, let's say that, let's use your model again. Here and 12. Now let's find the range high and low. We have the high of the range being somewhere inside this wick in here. Not sure exactly where the wick is. Yeah, perfect. There it is. And we have range low coming about right here. All right, so this is the range. Again, if I was journaling, what's the pip count of the range?
Okay.
We had a slight poke above. What time was it? This was 4:30 in the morning. Then price trade down. This is almost New York opening. This is the 15-minute candle before. So right before New York, we traded back to an order block here, which was formed at midnight. And if you look closely right here, we have about 4 consecutive
Down close candle.
which means this is 1 hour.
Okay.
So New York opening trades down to an order block that was formed in at midnight, and then we traded higher to take out. This would have been the previous New York sessions high. Right here, that would have been previous New York session high. So New York open gives me a setup that takes out the previous New York sessions high. Price trades back down inside my range, consolidates, then it breaks lower. Now, this order block was sensitive before. This time period was sensitive before. So now we're gonna blend some time aspects to this. New York opening is right here, okay? And we have the opening price of the candle right there. I'm gonna take off that. I'm gonna take off this. So now I'm left with this data. This tells me that the daily range so far, and using the full range like you would, that's my range I'm working with. So now I have New York opening that started the push right about the midpoint of the range. So then this is the premium end and then this is the discount end based on ICT. So I'd want to find an order block that is above New York opening that I can enter on. Now, there are multiple things that I could show you in here that could help you call this exact price point, but that's not important. That precision is not important. It's the context that's important.
Yeah.
We want an entry above this price. We're looking at the structure here. Price made a bearish order block at the midpoint, then it drove lower. All right. So now, if liquidity is right at the midpoint and up here is premium, I want them to run this liquidity. So if they're going to run this liquidity, I'm looking for order blocks that's above this high. If you look in here, we could find order blocks above this high.
Yeah, fine.
This one is just standing out, so I'm just going to use this one. That's the most obvious order block right there. So now, most of the things that we're looking for are met. This is our range right here that we started with. We had a stop point of the range. We had New York opening right here. We have an order block above. If price breaks here and gives us an entry like this, the next area to target would be below the range because buy side liquidity has already been taken from above the range. So even before price trades here, your trade plan can look like this. That's it. That's my order block high. If you want to put it above the range high for safety, that's fine. Your target is the range low. So if you get an entry exactly right here, if you're using a limit, you're looking at a 4-to-1. If you're able to refine this entry, and I know this is a little bit of cherry picking right here, but if you're able to refine that entry to, kind of find that price point again, somewhere in here. Let's say you split the candle in half and you use the midpoint. Your risk is at the same level. Your entry is just slightly better. With the same risk parameters, this trade becomes a 6-to-1. If you hold everything here. Now, if you factor in the fact that this is 1.30, so then we have big figure level right there, 1.3, right there, roughly. You aim for that. I don't know if you want to aim for pips below or something below, but this trade is already improving itself and you're doing nothing but following the rules that you outlined. You don't want an entry below here. You want to see this get raided and you want it to come back to this order block. If price should trade up here and it's going above that order block, you cut the trade. If you cut the trade early and it doesn't close above here, then you can take another entry right there. If you want to cut the risk, then that's on you. That's your risk management.
Yeah.
But then it no longer becomes you're scared or you're looking for something. Everything is, the plan is already laid out for you. You made this plan. All you have to do is show up for work. Then you journal, what time did you get this entry? This was in London. Perfect. You could have predicted this to happen in London by simply stating the fact that the entry you want needs to happen after a stop hunt. The session that's predominantly known for hunting stops is London.
Yeah.
So you could take a trade here and then be out by New York, really. And then that's it. But hopefully this, kind of helps you to put your plan together. I think we have like a minute left. So maybe another time we'll do this, but thanks to everyone that showed up.
Thanks to you, man. Really, you're helping me a lot to improve my system. Thank you. Thank you.
Glad I could help and enjoy the rest of your night or
Pick up
day.
yourself, good shit.
Cool.
Thank you, man. Thank you a lot, man.
Thank you.
Nikhil.
Yeah, man,